And today is April 1st, 2020, and it's almost 10 minutes until 10 a.m. in London. And over the next 10 minutes, I'm going to provide you guys with a quick update on the markets we have from now until about 10 a.m. to check things out. Okay, so let's just dive in. And if you are new, by the way, about this is a daily market update we do here on the Investing Cube page. And we also do it on the ATFX YouTube page. It's very straightforward. The easiest thing is actually just to subscribe to us on YouTube, and also there's like a little bell button. If you click on that, you get a notification if you have the mobile app, and that will let you know when I'm live. So that's the easiest. And then as well, you can always follow me on Twitter as well at AlexFX00. I will most of the time retweet or tweet that I'm about to go live. But otherwise, what we do every morning here is literally just update the markets to sort of give you guys an idea what's going on. In the chat box, we have Ugo. Thank you so much for joining us this morning. I hope you're doing good. And yeah, let's dive in. If you guys want to say hello, then you're most welcome to do that. Fortunately, though, because of time constraints and the whole new coronavirus situation, we won't be able to do like half an hour longer as we usually do. Okay, good. So let's begin, and let's begin by sort of providing you guys with a little brief overview of what's happening on the markets. So we're having a bit of risk off. So we had a report from Japan. I think it was a Tankan report, so a leading economic indicator, and that one declined to 7-year lows. That caused the Nikkei 225, so the Japanese stock market index, to decline and close with about 4% lower, and that sort of kickstart a bit of a wave of selling. So you can see the German DAX is down by 2%, S&P is down by almost 3%, Nasdaq is down by 2.66, and Euro is also a bit lower, as well as the GBP. And then the dollar yen is actually up a bit. So this is sort of the current state of the situation. And what we're seeing here is fully normal. I mean, a lot of the markets, stock markets, did decline. I mean, the German DAX, I think, is still sort of around 7-year lows. Actually, when it was down here at 2013 levels. So what you're seeing here is effectively markets go down first, and then the indices kick in. The economic data kick in because people are reactive to what they think is going to happen with the coronavirus, so they sell their stocks, and then you see this in the data, which is usually lagged anyway. Now, it's more of a coincidence that the numbers are down as much. Like if we do take a look at the Japanese stock market, then you can see here that the Japanese stock market index is actually trading at the same levels at one point as it did in 2006. But overall, you know, sort of you're dealing still. I mean, it's just a coincidence that it's not a coincidence that the numbers came down, but here in this case we're down actually at 2015 levels. At one point we're down at 2013, 2014 levels really. So it's a coincidence that this was down to 7-year lows, and that index is also down to 7-year lows. Many of the indices that we've seen, like the PMIs, for example, in the case of China, the PMI number that came out last month was lower than the levels we ever seen in the index. What's also quite encouraging is that the numbers from China, so you had the official figures that were out 2 days ago, and last night we had as well the sort of private sector, the Caixin PMI, and they all bounced back above 50. That tells us that there is growth in that sector. I mean, it would have been really bad if the numbers again lingered around 0. But in fact, what probably will happen is that you'll have, at least in the Western world, because we just shut down, you have another month or two of maybe bad data. But then when people go out and start working again, you'll see some very solid and strong numbers. So the numbers are going to react on the downside and on the upside. If we take a look at the coronavirus situation, just to give you a little bit of an update. So these are the numbers from France. So they're not really good here. They moved up to 17%. And they did that yesterday. So that's not really good, even though they've been on the lockdown. Here is the numbers from Germany. So Germany is at 7%. That's a solid level. 7 is good because it's not too much. And hopefully we'll go down a little bit lower. Of course, if you look at this chart, you can definitely see a change here since then some people started to stay at home. But we really want to see this trade lower and want to see this go faster. But obviously it's a bit of a struggle here. Maybe they need to do more, or maybe we just need to wait. Now here there are Italians. The Italians are doing a terrific job. The 4% growth yesterday, and they closed down here on the 9th of March, which is here. At that day we had 24% growth, and then since then we declined, then went up, and it's going steadily and steadily lower. And then you have the numbers in the US, which is okay as well. 14% is not huge. Obviously we would like to see them lower. This is the level here from 13% from March 22nd, and then you have March 16 lows here at 11%. I reckon, people, after, if it should happen in this week or next week. President Trump said yesterday that the next 2 weeks are going to be difficult weeks. And the reason for that is that you can see here the US has about 180,000 cases right now. And if we just do a simple mathematical calculation, I mean, we don't even have to do it like this, but if we just say that it's a 10% fatality rate, then they'll have some 18,000 deaths in the next few weeks, maybe 30 days. And this is going to go up, and that's exactly what President Trump is talking about. And I think maybe when these numbers go up faster, then I think that's when the real panic is going to set in the US. And we already seen significant lower activity in the US, but maybe we'll see even lower as people would stay at home, even more than before. And then you have sorry. These are the American numbers, 15%. And 14%. So sorry, I'll take that back because we're actually looking at the UK numbers before. So these are the American numbers. And here the Americans have already done a very good job. You can see we actually moved down lower. So it's looking good. Still need to go down lower. Of course, if this continues, we can, sometimes you can just add a little trend line like that. And then we sort of forecast maybe 14 days in the future. So we'll be in 14 days or something like that, will be somewhere around 7% or something like that if this trend continues. But it's more likely that this is actually going to go down faster because the lockdown measures here. This is the UK numbers, and the UK numbers are growing at 14%, which again, they're not doing, it's not good enough, I think, here, neither in France and in Germany. And here are the Spanish numbers that are going down. It's more of a lockdown. And people taking this, the numbers are going slightly better here, but it's going down, but it's going down a bit slowly. And here are, here's like an average for all these countries. Of course, America, with its big economy, has a bigger impact on the world economy and stock markets. So it's not fair to give everyone the same weight. But just to get an understanding here, as an aggregate, things are improving. They're not going worse. I do know from an absolute number perspective, yes, it's getting worse. But look beyond that, and on a worldwide basis, this is 11% here, which is not that bad. So things are looking okay. Okay, from a stock market perspective and trading perspective, for now though, if you look at the German DAX, the market is slightly lower, and this is actually an opportunity to sell and to buy. So if you, because we have all this data, right, and it's going good. However, it doesn't mean that people can't go out of business. It doesn't mean that the unemployment rate is not gonna turn worse. Even though I think the longer term perspective was still to the upside, in the short term, you can easily have a decline of 10% in this market, and then we still go higher. So you can actually trade both sides of this. And what you could do if you're really bearish is to look at the German DAX. You got a nice low here and a nice low here. And if it does trade lower here, because this is a rectangle, we can probably go down to maybe like 87.31. That's a solid move. And then if you're on the bullish camp like I am, then you would just look to be bullish here exactly as we were a few days ago. And I do know we're moving very, very close to here. But as long as we trade above this low, we're dealing with an uptrend. And then if you want to be fully neutral, you would just look for a bullish break here and a bearish break here if you don't want to be trading this range. The S&P 500 is at support. So this was the buy spot. A few days ago, we said look to buy here for this to go up. And then we said look to buy here exactly for this to go up. And now we're back at the buy spot. Of course, we went a little bit deeper than I wanted. The trend remains bullish though, above 24 2,464. If we take this out, we'll go a little bit lower. I'm not sure how important this level is, but what I did do here is I tightened things up. So if you have been tracking your trend or holding on to a position from here, for example, you have reduced the risk significantly. So I'm going to continue to be bullish here, at least on the 1 hourly. All of these candles are looking encouraging for a move to the upside. If you look at something like the price of gold, gold did trade below support, and I said if we take out this level, we might go a little bit lower. And now, at least in the short term, we have formed some sort of a high here in the short term here, and I'm gonna be bearish below 1645. So below this level, I think we're going down and then up and then probably lower again. But I wouldn't be betting any money on this. I'm not very encouraged about this overall structure of this. If you look at crude oil markets, so crude oil markets a few days ago, we said, actually yesterday, we said, yesterday, we said, look, actually, no, that's true. Already, I think when we're down here, we said, look to sell here for this to go down. It went down a little bit, then it went up, and then it went down. Now we're having some nice stabilization here. It wouldn't be a bad idea to book some profits at this little spot here. Only if you're like super bearish would I continue to be holding on to this position. So we can book profits there, and going forward, if we swing up to something like 21.30, I'll be bearish, and I'll be bearish as long as trade below 22.05. And then we can go down to the same low here and then probably lower. If you look at the euro versus the dollar, the idea was to buy here. We said yesterday to buy here. The market did go deep into the buy spot and then went up, so we're in a bit of a profit. Now the market is pushing back down to support. But as long as you trade above 108.94, the trend is bullish here. I think we can go up to 110, maybe a little bit like 110.34 over the next 24 hours, and then we'll see what happens afterwards. There's definitely challenges with this, and it's a bit like crude oil or gold prices, where in the big picture, you don't have a strong trend. If we look at the GBP USD, then the situation here remains unchanged. You have a little bit of a double top here. If we take that out, we can probably go a little bit higher, maybe like 26.32. I think that makes sense. The alternative is to let this go down to 21.82 and then maybe buy here and then push to the upside. And then you have the dollar versus the Japanese yen. The trend is bearish here below 109.28, which is this level here. The idea was to sell here yesterday. We're at support. You can book a bit of profit here if you want to. It's up to you. And I think if we swing back up, I think people are going to sell. But in the longer run, because of the pitchfork, it's pretty much telling us we're going to go down to 106 and maybe even down to 104 at one point. So that's what I'm looking at. Okay, so we have Jose. Good morning to you, sir. I hope you're doing good. Thanks so much for joining us. We have a new person. I haven't seen this before. Julie, thanks so much for joining us. And we have Vincenzo. Good morning to you. And we have True Invention. Good morning to you as well. I'm very happy to see you guys here. So my daily call actually has already started with my team here. So unfortunately, I would need to leave you right now. Tomorrow we'll be back hopefully at 9:30. I had a few meetings as well. I've been in meetings since 8 a.m. actually. So it's been a bit difficult to join here with you on time. Now you can check this out as well. We just launched this one. So we did the Q2 report. You just need to be a member to read it, and you can check it out. It's very straightforward. It looks like this when you sign in, then you download it, then you get this PDF, which is about 28 pages long. It gives you a little bit of an idea. I've written the Euro dollar, dollar yen, Aussie dollar, and GBP outlook. The other sections have been written with other members from ATFX. And we wrote this actually a few weeks ago, so it's definitely been some quite big moves here. So levels are still good on some. But what I think all of these Q2 reports, what's important is actually to read the fundamental parts of it. I think that's really what's useful, because the markets obviously move so quickly now that it's difficult to sort of project exactly. Because I know, for example, with the Aussie dollar, I think we already hit profit target, and now we're pretty much where we were when we did this a few weeks ago. But it's still worthwhile reading. And being a member as well of Investing Cube allows you to actually see much more content, because as you probably noticed, half of the content is locked, and when you are a member, you can read absolutely everything. Okay guys, I want to thank you so much for watching. If you do have any questions for me, do let me know. You can reach out to me via AlexFX00. Have a great day and stay safe out there. Thank you.